What if I told you that the next big market crash won't come out of nowhere? In fact, every major crash in history followed the same 4 warning signs. And once you know them, you'll start to notice them everywhere. Today, I'll break them down in plain English. So even if you're brand new to money and investing, you'll understand exactly how to spot the next crash and how to protect yourself. This video is a bit of a history lesson, and I want to finish with how anyone can invest in any market conditions. Chapter 1, the first crash, tulip mania. Let's go back to the 1600s in the Netherlands. Back then, tulips, yes, flowers, became the hottest thing you could buy. At first, they were just rare and expensive, but soon, literally everyone started buying them. Not because they loved flowers, but because they thought prices would always go up. People were paying the same for tulips as we'd pay for a house today. Some contracts to buy tulips were worth over $200,000 in today's money. It was pure hype. And when people finally realised tulips weren't worth pretty much anything, the whole market crashed. Lesson 1, overconfidence and hype always leads to trouble. If you're interested in early retirement, hit subscribe so we can build wealth together and so we can live life on our terms. Chapter 2, the 1929 crash, the Great Depression. Fast forward to the 1920s, everyone was making money in the stock market. Even kids were buying shares with pocket money. But here's the problem. Most people were buying stocks using debt, money they didn't actually have, and the government wasn't stepping in with rules to keep things safe. When prices started falling, debt made everything worse. People lost their homes, jobs, and savings. 1 in 4 Americans ended up unemployed. Lesson 2, weak rules and too much borrowing create disaster. As always, nothing in this video should be taken as financial advice, and the full disclaimer can be found below in the description. Chapter 3, the 1987 crash, Black Monday. Now to the 1980s, the age of greed. Computers were brand new, and Wall Street invented something called portfolio insurance. It was supposed to act like a seatbelt for money. If the market dropped, computers would sell small amounts automatically to protect you. But when everyone's computers sold at the same time, it created an avalanche of selling. The market crashed in a single day. The biggest one-day drop in history. Lesson 3, new inventions sound safe until no one really understands them. Chapter 4, the 2008 crash, the housing bubble. This one you've probably heard of. Banks were handing out home loans to pretty much anyone, even if they couldn't afford them. Then they bundled those risky loans into packages and sold them as if they were safe investments. Families bought houses they couldn't really pay for. Banks made billions, and then it all collapsed. House prices fell, banks failed, and the world went into a huge recession. This one is personal to me because the financial crisis of 2008 contributed to a negative decade where I didn't invest into any assets. But don't worry, with experience, I've learned how to invest in any market conditions. I'll get to that in a minute. Lesson 4, too much debt, whether it's houses, credit cards, or student loans, can topple the whole system. How to spot the next crash. So what are the 4 warning signs before every crash? 1, overconfidence. People buying stuff just because it's going up. 2, weak rules. Governments not keeping up or stepping in too late, like the Fed as we approach the end of 2025. 3, new inventions. A magic product no one fully understands. 4, debt. Too much money borrowed and not enough real value. If you see all 4 happening at once, history says trouble is coming. Chapter 6, what you can actually do. Okay, how do you protect yourself? Don't panic and sell everything. Crashes don't last forever. Don't put all your money into gold or cash. Over the long run, stocks usually win. Don't try to time the market. Nobody can guess the exact day things crash. Do keep investing regularly. Crashes are like sales. The best time to buy is when prices are low. That's the long story short of how to invest in any market conditions. But if you want the full version, you can join my free investing school and I'll give you all the info you need. I have 5 videos on this very topic waiting for you in my school community. See the link below. Summary. Crashes are scary, but if you understand the patterns, you don't have to fear them. Because while most people panic and lose money, the smartest investors see opportunity. So the question is, when the next crash comes, will you be ready? If you focus on education, you'll be okay. And if you can teach yourself to be a long-term investor, I'm very confident you'll be okay. But what if you're not quite sure how to invest? Well, if you see below, you'll find the link for my latest playlist, How to Retire Early. Basically 5-10 minute videos that will help you with investing step by step. Anyway, thanks for watching.